Hi friends, welcome to Adda 24/7. We are in the most important questions for BFM. In fact, it is for all the subjects. I am covering ABM and BFM. Plus, most important questions plus case studies also. So yesterday you have seen I have covered an important case study. So let's start today with some other important questions. Okay. Which of the following? Okay. Before going ahead, everyone subscribe to the channel, click on the bell icon, share it with your friends. Don't miss this. Okay. Which of the following are the examples of operating expenses of the bank? Operating, kindly note. Operating means what? Daily expenses. So which of them are the daily expenses or operating regular expenses going on? Yeah. Operating expenses of the bank. Look at this. Look at the options. Yeah. What are the options? So it is, think over it. So it is, see this, payment of PF gratuity to the staff. Depreciation of the bank property, law charges, advertisement. So this is also an operating. This see here, whatever comes in P&L, regular one. Okay. Interest on borrowings and refinance for RBI from RBI, directors fee. These are not the operating expenses. So the answer is PF gratuity. Then bank property depreciation is also part of your operating expenses. Law charges, advertisement, these are all the part of the operating expenses. So the answer is 1 and 2. Okay. Next. What is this refinance from RBI? What is this concept? Refinance from RBI. See, understand this. Refinance means what? See here. Let me explain you with this example over here. Suppose, let's say, there's a XYZ bank. Okay. This bank finances, let's say, some gold loan or some tractor loan. Then what happens? Imagine now we have many banks which finance gold loans or agri tractor loans. So what happens in this? Whenever the finance is done, the bank's money gets locked. So what does the bank do? Bank goes to RBI, and then RBI refinance this 800 or 1000 crore, whatever it is, and it gives around 80% of that amount. So if the bank finance on tractor is 1000 CR, then RBI will give around 800 to 900 CR, depending on that quality of loans. Okay. So that is refinance. So that's not a part of your operating expense, isn't it? Which of the following is not correct regarding the OTC products? OTC means what? OTC, over the counter. Over the counter means OTC, over the counter. You've heard this word, over the counter? Where have you heard this word? In your daily life also? Where have you heard this? This we generally hear in our medicines, generic medicines, right? OTC medicines are called as generic medicines, which can be given without any prescription. Same logic over here. Finance also. OTC products means which can be sold without any much brain work in this. Okay. So not correct. We want not correct regarding the OTC products. Here, it's a negative question. Kindly note. The derivative products are indirectly negotiated and obtained from the banks. So indirectly negotiated and obtained from the banks. Okay. These are mostly used for hedging the underlying risk. Means like options. Okay. These are all OTC products. The price is quoted by the bank. The price is quoted by the bank. Okay. So which one of them is not correct? Price is quoted by the bank for OTC, which are available with the banks. Here, of course, OTC products are available with the bank. Okay. Yeah. So what can be the answer over here? Not correct. See, a not correct answer. See, indirectly negotiated and obtained from the banks. Is this only from the banks? These products can be only through the banks? No. This can be from others also. Okay, other financials. So they are mostly used for hedging. That is true. This is correct. The price is quoted by the bank. Okay, means of course the purchasing party will be the bank. Okay, so this is also true. So the only answer over here is obtained from the banks. It's not only obtained from the banks. These are like common derivatives. Let's see, options market, Reliance option, this option, that option. Are they obtained from the banks? So that is the point. When a party enters into a contract to deliver foreign currency on a future date at a fixed rate, it is known as foreign currency on the future date at a fixed rate. Look at the 3 points. Foreign currency on a future date at a fixed rate. Okay. So this is known as what? Forward, futures, options or swaps. This you have done it in your module A also, isn't it? Module A, this question is there. This is related to your forex. What do we do in your forward contracts? What is a forward contract? What is a forward contract? Okay, let me give you the answer also. So the answer over here is what? Firstly, let me give you the answer. The answer over here is forward. Okay, deliver the foreign currency on a future date. So that's forward. So it's a forward answer A. Now what is the difference between forward and future? Let me explain you that first. Because even future can be the answer, to be frank. Even future can be the answer. Okay. Options are basically premium based. So, but somewhere if it is in the money option, then that can also be the answer. That's why, see, our BFM is confusing. Why? Because all the derivatives can be the answer. But we want to find the nearest one. Nearest one is forward. Okay. Swap can also be the answer. I can have a swap with you. I'll deliver some forex and I'll take something from you in a series of payment. Anything can be an answer, but we have to find the nearest one. The nearest one is forward. What is the difference between forward and future? See this. There's only one difference. In forward there are 2 parties. In future there are 3 parties. 2 parties means what? There is the buyer seller in forward. In future there is buyer seller and exchange. Exchange means what? Here the like NSE BSE. NSE BSE is an exchange. So when you sell any share, do you know who's buying it? We don't know. When you buy any share, do you know who has sold it? You don't know. Why? Because this NSE BSE is in between. Exchange is in between. These exchanges act as a pool. Okay, and they set the rules. So they set the rules. Like for example, in forward I can buy, let's say, $5 from you. But in future I can't buy. Here I'll have to buy the packets which are fixed by the exchange. Okay. So that is the point. Also, what is a swap then? Swap means basically there are 3 important points about swap. One is exchange of cash flows. Cash streams we call it, actually streams. I'll give you per month some 1000 rupees. You give me at the end some amount. What is that? RD? RD is also a swap then. Term loan. I'll give you one stroke 50 lakh rupees. You give me in EMIs. Exchange of streams. There are 2 legs in the swap, fixed and floating. One is fixed, second is floating. Okay. I'll take 1 lakh rupees from you and guarantee you 7% rate of interest. Fixed stream, fixed leg. I'll take that 1 lakh rupees and invest it in the stock market. Floating leg. Right. Swap is always this principal plus interest, except there is one swap that's called as interest only swap. That's a separate part. Otherwise it's principal plus interest. Got it? Got the answers? Got the clarity in fact? Type yes in the comment section. Okay. When the buyer has to pay the interest in rupees, and the principal is in USD. The borrower may hedge only the interest rate. It is known as, just now I told you that swap, where interest only swap, has to pay the interest in rupees. Principal is in USD. The borrower may hedge only the interest rate. So only the interest rate has to pay the interest in rupees. Okay, means basically the principal is in USD. The interest is also to be paid, should be paid in USD. But no, it is said that no, interest you pay it in rupees. So that person will hedge only that, whatever is the exchange part. If I've taken a loan in USD, I'm paying in USD. Why do I hedge the currency? I'll hedge only that part which will be related to exchange. So here I'll take only interest only swap, isn't it? So that will be the answer, D. Interest only swap, isn't it? Now before going ahead, everyone kindly subscribe to the channel, this JAIIB CAIIB English. Do it right now. Okay? Join the crash course starting on 11th October. Very important, very simple. Everything to the point covered, and from the exam orientation point. You can join the Mahapacks also. In Mahapacks, you are getting multiple batches. How to join all this? I'll tell you at the end. Okay, let's move on to some other questions by now. Which of the following bank cannot issue the certificate of deposit? RRB, public sector bank, local area bank, and both A and C. Think over it. Which of the bank cannot issue the certificate of deposit? Let me see the answer from your side. Firstly, you tell me what is certificate of deposit. What do you mean by certificate of deposit? Yeah. Certificate of deposit basically is issued by the banks, and any company can issue it. It is an investment tool offered by the financial institutions in which the investor have to deposit their funds for a specified term to earn premium interest rates. Now what is happening? Many of the companies are shifting their FDs to CDs. Okay, many of them are shifting their FDs to CDs. Okay, so now there are minimum stipulations given by RBI. RBI has given various stipulations regarding the CDs. RBI says a CD issued should be in a dematerialized form compulsorily. It should be issued electronically, and it may be automatically renewed if the depositor fails to decide what to do with the matured amount during the grace period of 7 days. So these are the guidelines given by RBI. Minimum amount of deposit which RBI has kept is generally kept at 5 lakhs. Okay, but let's see minimum amount. So in the meantime, you tell me who can issue and who cannot issue. Okay, certificate of deposit. So the point is, who can issue? It is both. It is only public sector banks who can issue, and cannot issue, the answer is both A and C. Yeah, so now answer me. What is the minimum amount in CD? Minimum. Let me check. Minimum amount of investment in CD. What is the minimum amount? Who can tell me? In the comment section. Everyone type in the comment section. Minimum amount of investment in the certificate of deposit. This question, see here, CD, CP, both of them are having the same amount nowadays. They are having it for 5 lakhs. Okay, so amount has been brought to 5 lakhs. Minimum amount of investment. Okay, got it? Move on. Next one. Okay. Now next one. Which of the following policy rates is used by RBI for absorbing liquidity from the economy? Absorbing liquidity. Okay. Repo rate, MSF, selective credit control, and moral suasion. Now absorbing liquidity means RBI wants to get money from the system. So which of the policy rates is used? Think over it, each one. Think about it, each one. Which of the rates are used by RBI? Yeah. There are more tougher questions coming up in this session today. Okay, so follow it completely. Yeah, it is. Which one is used? It is moral suasion. Remember, moral suasion is the tool used by RBI for absorbing liquidity from the economy. Okay. So repo rate is also one of the important tools. By repo rate, RBI control increases the base rate or decreases the base rate. Okay. MSF is marginal standing facility. This is a facility used by the organizations or the banks, mainly used by the banks whenever everything dries up. Dries up means there is no chance of getting any money from any other bank or even RBI through their OMO. So in that case, MSF comes into picture. Okay, MSF rate is the highest rate. Then selective credit control, that is totally different. Selective credit control is related to the internal part of the bank, means whom to give the loan and whom not to give the loan. Moral suasion is done by RBI for absorbing the liquidity from the economy. Okay. Next one. What rate will be quoted to the customer in the given scenario? The inflow of USD 50,000 by the FI, foreign institution, for credit to your exporter's account, being advance payment for exports. Credit received in Nostro statement received from the New York correspondent. The market rate for USD is 75.25 and 228. So what will I use? Will I use 75.25 or 75.28? Buying rate, selling rate, what will I use? Or 75.25, 28, 23 and 28. In fact, I'll solve this query for you. See this. What is happening? The customer is, the rate is, what is happening over here? Credit to your exporter's account. So this is my exporter. Okay. And this is some buyer or some importer, anyone. Okay. Importer. Now this importer is giving money. See, these dollars are coming in. Dollars are coming in. Okay. So whenever dollars are coming in, you have to buy the dollars. So what do we do as a bank? We buy the dollars from this customer. See, this exporter will get the dollars, but he has to spend in rupees. This exporter can't spend in dollars. If he has to give it to some salary to somebody, this salary can't be given in dollars, right? So this salary will be given in what? Rupees. So he will sell the dollars to you, bank. Okay, so the exporter will sell the dollars to you and you will sell the rupees to that guy. Sell means give the rupees to that guy. So what are you doing over here? Dollars are coming to you, so you will be buying. So you have to use the buy rate. So what is the buy rate? Always remember, whenever you have two rates, 75.25 or 28. So whenever you have these rates, 25 is known as the buy. Okay, buy. And 28 is known as the sell. Okay, there are various names. This is also called as this bid. Okay, this is also called as offer, or some banks call it ask, bid ask. Okay, so it can be anything. You, for your CAIIB terms, remember simple logic. This is the buy rate. So you will be using the buy rate. Now there is, in this question, it's not given, but I'll ask you over here. Will you be using the bill buy rate, or will you be using the TT buy rate? What will you use over here? Bill buy or TT buy? Think over it. I'll answer that also. Bill buying or TT buying? Tell me. Bill buying rate or here answer for this you have got it. The answer is what? Buying rate of 75.25. Where is it? 75.25. B is the answer. Buying rate of 75.25. You have got the answer. Okay. But the question is different now. My next question is, will you be using the bill buying rate or TT buying rate? So now you understand, whenever you have to finance anybody, whenever you are financing, at that time only you use the bill buying rate. Here are you financing? It is a simple transaction. Somebody has given the money, you have to just exchange that money. So it is called as a spot transaction or TT buying. So spot or TT. So here you will be using the TT buying rate. Okay. So TT buying rate of 75.25. That is the exact answer. Which of the following is a potential cost of adverse movement of the interest rates that the bank faces on its deposits, borrowing, lending and interest rate derivatives? So potential cost for the adverse movement of the interest rate means if the interest rate goes lower. Interest rate means what? Here we are talking of repo rates. So if the repo rate goes up or down, what is the cost to the bank? How will the bank be affected? Yeah. How will the bank be affected? Yes. Think of it. So the answer is, everyone, the answer is, what is the answer? See here, understand this: legal risk, operational risk, interest rate risk, country risk. Now adverse movement, adverse movement means adverse movement of the interest rates. So that will be led by what? Legal risk is totally different. Legal risk is a part of your operational risk. Legal risk is a part of your operational risk. Okay. So that is not a part. That is not the answer over here. This is due to the changes in the interest rate. So definitely you'll get the answer as interest rate risk. What do you mean by interest rate risk? If the interest rate risk means if the interest rate goes down, see, our logic is very clear. If the interest rate goes down, okay, then what happens because of this interest rate? What is the difference? See, our first thing what happens is the bond prices, okay, they go up. Very important. Interest rate down, bond prices up. The prices of the bond will jump like anything. Second point, interest rate down means what? The rate of interest for the loans will go down. So loans will go down means what? Bank will earn less in this case. There is also a negative effect on the economy as such. If the interest rate goes down, the loans rate goes down. So customers will take more loans. Companies will borrow more loans. So if companies will borrow more loans, then what will happen next? If companies borrow more loans, then they'll spend more. People will get more money in their hands. So that will lead to inflation. Okay, got it? So there are multiple effects of single policy decision. Got it? There are multiple effects. Okay, move on. Chalo, next one. What is the purpose of certificate of origin in international trade? What did I say? There are difficult questions coming up. Why is COO used? To determine the value of the goods in the international trade. To determine the invoice numbers of the goods in the international trade. To determine the origin of goods in the international trade. To determine the bill of lading number of the goods in the international trade. So what is the logic behind the COO? Now COO is always used to show, first let me get the answer from your side. Value of the goods. Value of the goods, from where do we get it? Value of the goods. This value of the goods. This I'll get it from two documents. Two things. In fact, not documents. One is invoice. From invoice I'll know At what rate is the are the goods being sold, right? Second, to determine the invoice number. The second one, I can get it from that this BL also, from BL or the customs document. Whenever I declare it at the customs, there also I come to know about the value. Okay. To determine the invoice number of the goods. So invoice number is not that means certificate of origin is not required for determining the invoice number. Okay, that you can directly see it on the invoice itself. To determine the origin of goods in the international trade, this is very important, and this is the answer. To determine the origin of goods in the international trade. Now, why is that? Why is this required? Now, look at this. Many countries, what do they do? For example, in our country only. Suppose if somebody brings the goods from China. Okay, goods are brought from China. Let's say China to Bharat, I'll say now, Bharat. Okay. Now China to Bharat, the goods are brought. Now what happens in this? Once the goods are brought, this person will do what? He will change the label. Change label. If he changes the label and makes it made in India, and then sells it to some other country, Europe or anyone, Europe. So now ethically, is this correct? Is this ethically correct that I am selling the goods which are manufactured from some other country and then I am changing the label made in India and then selling it? So ethically it is wrong. Many of the countries want where the goods are originated. Why? Because I'll tell you there are various reasons for this. Some countries have their internal rivalry or animosity, enemies. For example, which one? Many of the countries have the rivalry or animosity with Iran. So many of the countries, if you see in international trade, they say that we don't want any goods from Iran. We don't want any goods from North Korea. Similarly, some countries don't want any goods from China because of the quality. So that's why the country of origin of the goods should be known. Okay, and that is the basic purpose of COO. Okay, certificate of origin. Got it? Shall we move on to the next one? Okay, chalo. What is the objective of ISBP 745? Now we are talking completely of module A, international trade. What is the objective of ISBP 745? To provide the guidance for issuance of LC, to encourage uniformity of practice worldwide, to reduce the number of credits rejected by the banks owing to the discrepancies, to provide a set of rules for bank-to-bank reimbursement. All A, B and C means all of them. So what do you think should be the answer over here? First search on Google right now. What is ISBP 745? Or if you have studied, it's well and good. So search on Google first. What is the objective of what is ISBP 745? ISBP 745 is a supporting document to UCP. Remember this. ISBP 745 is a supporting document to UCP. Got it? Supporting. Okay. So if it is a supporting document, then what is the purpose of this? Provide guidance. Guidance will be provided by UCP. This is provided by UCP. Okay. Then C, to provide the set of rules. Again, it is provided by UCP 600. Now remember, you will say, what is this UCP 600? See this. Those who have not started their studies up till now. UCP means what? Uniform Customs and Practices. Uniform. The full form is actually not UCP. You see, Uniform Customs and Practices. Now UCP for documentary credits. That the full form is actually UCP DC. Documentary credits. Okay, so that is the full form. The full form is actually UCPDC, but we don't write such a big word. That's why we write only UCP. And what is this 600? There are various versions of UCP. Means it has started from 100 Then earlier it was, means before 600 there was 500. Now next UCP coming up is UCP 700. But still the date is not on. So that's why we are still using UCP 600. Now there are 5 documents in international trade. Very important 5 documents. One is UCP. Second is ISBP. Third is URR. Fourth is ISP. And fifth is EUCP. So these are the 5 documents which are used in the international trade. All these are related to various other domains. Okay. So ISBP is a supporting document to UCP. Supporting. URR is what? You are having this in your CAIIB portion also. Uniform rules and regulations. Right now the URR going on is 725. ISBP going on is 745. These are the versions. UCP going on is 600. Okay. ISP going on is 98. EUCP is 2.1. So these are the latest versions of these UCP, ISBP, URR, ISP and EUCP. So URR is for Uniform Rules and Regulations for reimbursements. These are used when we use a reimbursing bank in between. ISP is what? ISP is mainly for standby LCs. What is standby LC? Standby LC is similar to that of the guarantee. In Europe and America, banks can't issue guarantees. So that's why they issue standby LCs. So that's why this ISP 98 has come in picture. EUCP is for the online, all these 4 things, means basically UCP. All this UCP is for LC business. Now LC means physical LC. But nowadays we are shifting to e-platform. So that's why we have EUCP. EUCP is basically a document for UCP 600, online trading, online movement of UCP. Okay. So that is the basic purpose of EUCP. So now the question remains, what is the objective of ISBP? The ISBP is to encourage the uniformity of practice worldwide to reduce the number of credits rejected by banks owing to the discrepancies. Now what do you mean by this? Now understand, it's very important from your CAIIB point of view also. UCP has total 39 articles, 39. But they are so difficult to understand and each person interprets them in his own language. Like our regular laws, all our laws, anyone can interpret them in their own language. But there should be some guidance. So bring the uniformity in this interpretation. To bring the uniformity in the interpretation, this ISBP has been brought in. ISBP provides a uniformity. Uniformity means what? Here, it will give you how the invoice should be issued. Any invoice in the international trade should be issued. How the BL should be issued. What all signs are required on the BL. Okay. What all are the other documents required? What is the bill of exchange? What all points should be there on the bill of exchange? That will be given under UCP, some part, and ISBP mainly. What are the various certificates required in international trade? Like there are various health certificates, phytosanitary certificates. Those are required. Various lab certificates. So the idea about, or the clarity about what should be the guidelines for issuing these certificates, that is given in ISBP. So that's why ISBP is actually a supporting document for UCP 600. So what is the purpose of ISBP then? The purpose of ISBP is basically to encourage uniformity so that each bank doesn't interpret it in its own language, each banker. Okay. So uniformity. Otherwise what happens? I'll think something about the UCP rules. Somebody else might be thinking something different. So in that case, the LCs, credit means LCs. The LCs will get more rejected by the banks. Suppose in the way in which I am interpreting this UCP article, the same way the person next to me or the second person who's checking the documents from the issuing bank side may not interpret it in that way. So that's why he might take a wrong decision in this. So to bring the uniformity, this ISBP 745 has been brought into picture. Okay. In fact, this C can also be called as URR. Here UCP is a main document. Main which covers this bank to bank is URR 725. Okay, so this is also one part, URR. Okay, so got the answer. Now as I told you that I'll be telling showing you how to join the batches. See, the new batches are coming up in this October month. Okay, the new crash course batches. See, this crash course is very important from the revision point of view also. Everyone should do the revision because here many of us have started the studies, but we are not confident. To gain the confidence, this crash course batch is important. How to join it? Look at this. Go to Adda 24/7. Click on JAIIB and CAIIB. Always go through the app. In the app, you get 1% extra. Click on CAIIB November. Okay. Then click on this crash course. Ebooks, test series, online live classes, expert faculties, interactive classes, everything you are getting. And what is the code? Look at the code. Click on buy now. Put the code Y432. Click on apply. See this 77% off you are getting plus 1% extra through the app. That's why I'm saying download the app first because you are getting 1% extra over there. You can join the Mahapack also. In Mahapack you are getting multiple batches. 15 plus batches per subject. In fact, here you are getting the elective also. Okay. So join this SF immediately. Okay.